Welcome back. Of course, the story of the day today is IT and probably some bit of zinc coming into IT, and that's because of the possibility of the US government shutdown ending, providing that relief rally in IT that we're seeing today. But before I take a view on IT from Kunal, let me bring on board Ruchit Jain, Vice President, Equity, Technical Research and Wealth Management at Motilal Oswal Financial Services. Ruchit, thanks for coming in. Give us a take on the index. How are you seeing the move? How are you assessing the levels, and what are the levels you're looking out for?
Yeah, hi, very good afternoon. Well, in last week, we did see a dip from the 26,100 to 25,300, 350 range. Now, if we look at the broader trend on the weekly or the monthly charts for the Nifty, then that is still positive. And hence, this entire correction just looked as a corrective phase within an uptrend. The index has taken support exactly around its 50-day EMA support, which was around 25,350 to 300 zone. And we have seen a momentum resuming back from that support zone. So we believe that till 25,300 is intact, the markets are likely to resume its broader uptrend. We can see some sectoral shift, sectoral rotation happening now with IT coming into favor after a good consolidation phase. But on the Nifty front, on the higher side, we expect this momentum towards 25,800 to 850 in next few trading sessions.
Okay, so that's on the market right now. Kunal, coming to IT, very good move coming in for some of these larger cap names. You have Infosys, HCL, Persistent, they're doing well. But even the mid-cap names are doing fairly well for themselves. Infosys is up 2%, LTI, Mindtree, OFSS, Coforge, all of them are in fact gaining in trade. If you have to play the IT space right now, Kunal, would it be via the large caps or do the mid-caps look better right now?
Yeah, it's a good day for the IT index, and this could potentially be also a point where we may finally assume that the Nifty IT index would take support at the pivot of 50-day moving average. For the last, I think, 1 week, 10 days odd, the IT index has been swinging around the 50 DMA. Like on Friday, it was trading below, and today I think it's trading above the 50-day moving average. So it tells you that maybe over the last few days, weeks of the IT index consolidating, we would probably have formed a pivot support at this 50 DMA. Now, if we are looking at a reversal of sorts, or maybe even a trend pickup for the IT index, even if it swings around this 50 DMA, say for another few odd weeks, then the mixture has to be a little bit specific with respect to the kind of stocks which shows relative strength. Now, so far, we are seeing relative strength coming back into the few select large cap IT names. For example, Infosys and HCL Tech are the two ones which are showing relative strength much stronger than the rest of the other peers in the large cap space. Persistent and Coforge lands up to be the other few names from the mid cap IT names, which looks fairly attractive and relatively stronger with respect to many of its other peers. So I think these are the kind of 3-4 names which I'd be bullish on if I have to take a bet on the Nifty IT index.
Okay. What do you make of a Trent, Ruchit? The kind of move today, 7.5% lower.
So it's not just today's trading session. In this entire uptrend, we have not seen any kind of move or participation coming from this stock. And post the kind of volumes that we have seen, post the numbers today, this clearly hints at continuation of this underperformance. So as of now, the trend still remains on the negative side, with that low top, low bottom formation is not negated yet. Now, if you look at next major support, the entire previous uptrend that we have seen on the longer time frame chart, 61.8% retracement of that is coming around 3,900. So maybe that we could see the stock testing that 3,900 mark in the short term.
Okay, while we're talking about Trent, just want to revisit some of the brokerage takes that we've seen on Trent since morning. Because if you take a look at what the brokerage reaction has been, it's a massive downgrade coming in from Citi. And this largely is on the back of the pace of the revenue growth that we've been seeing. Because like we were highlighting in the morning, if you take a look at the quarter to FY25 revenue growth, that was around 40%, 39.6 to be precise. And that has fallen all the way down to 17%. Now remember, the management has guided a plus 20% growth, and they have missed their own guidance in this quarter. So this is also something that doesn't fare well for Trent. And on the back of this and multiple other factors, you have the word coming in from Citi, wherein they have downgraded the stock. So that loss of confidence from Citi is something that's not doing well for Trent. Downgraded the stock all the way to a sell rating from a buy. Target price has been cut massively to 4,350 now compared to 7,150 earlier. Everybody else continues to maintain the rating that they've had on the stock, but target price cuts is the consensus coming in across brokerages. Because take a look at Morgan Stanley, continues to maintain overweight, but target price has been cut to 5,456. Similar is the case from Goldman Sachs. You have Jefferies, Bernstein and Macquarie. They both continue to maintain their outperform rating, and the targets have been maintained at 6,100 and 7,000 rupees respectively. So that confidence from Macquarie at 7,000 rupees for Trent, when that stock is around 4,000, 4,100 levels right now, is slightly surprising to see after a quarter like this. So basically, it's its own numbers as well as the miss on their own guidance on the top line, the deceleration of the pace of revenue growth, as well as the big downgrade coming in from Citi, some of the factors that have led to such a massive cut on Trent. So while that is your top Nifty loser right now, let's talk on the flip side about which stocks are doing well from the Nifty index. It's Infosys, HCL Tech. But other than that, all eyes are going to be on Bajaj Finance. Let's take a look at the technical setup, Kunal. Bajaj Finance is up 1.5% today ahead of its earnings. What is your take on the technicals? And we'll also be talking about what to expect from the numbers. But before that, how is the stock placed on the charts?
You know, the setup is quite attractive for Bajaj Finance, but when you look at this with respect to the last, I think, 2-3 quarters when the stock had or how the stock had reacted post results, it's been a little all over the place because there have been days where you've seen post result the stock opening with a gap down of a couple of percentage points and then going to a further corrective mode. After that, the stock has seen a recovery, and there have been days when the stock has moved up higher post results by a few percentage points and then remained more or less flattish. So it's going to be a little bit difficult to anticipate which side the stock would probably open up post results. But then my sense is that when the near term charts are quite positive and attractive, when the trend is set on the upside, the risk reward is favorable, then the chances are that the stock may continue to rise up or move in the direction of the trend. So I think in this case, my sense is that Bajaj Finance could continue to move up higher. You've seen a near-term resistance developing closer to 1100 mark for Bajaj Finance. So maybe that could be just about a minor resistance which the stock may hang around. But I think if it breaks past about the 1100 levels, then the next target which we could be looking out for Bajaj Finance would be in the range of 1140 to 1150.
60% returns is what Bajaj Finance has given this year, and it's been a phenomenal year for Bajaj Finance in terms of investor returns. Let's talk about what the expectations could be. Of course, some numbers already disclosed. Let me take you through that first. The growth has been solid. AUM growth of 24%, 4.7% QOQ. You're looking at customer growth of nearly 4% QOQ, 20% YOY. So that engine continues well. The number of new loans booked have actually fallen QOQ. So that's where some part of the commentary will be kept in mind as to what's happening on the number of new loans. Was it just a quarter two phenomena or are we seeing that going forward as well? Progress on credit costs is going to be critical. They've guided for 1.85 odd % in FY26 full year. Can they maintain that? So will credit costs continue to come off both in Q2 as well as in H2? Bajaj Finance has an impeccable record of following guidance. So any guidance given, any change to that guidance could well impact the story and the stock. Margins will be in focus, likely to inch up marginally. The margin outlook will continue to be monitored and the growth will be assessed, especially in this quarter. This is going to be a critical quarter for Bajaj Finance because it's going to be a consumer heavy quarter and Bajaj Finance relies on consumer lending. So therefore, you'll likely see a lot of commentary around how growth is shaping up for H2 post the GST rate cuts. So we'll have to watch for all of that along with the numbers themselves, of course, and we'll look out for the numbers. Within the fine print, of course, already spoken about most of it, but profit expected to grow by 24% YOY, 4% QOQ, a shade below 5,000 crores where the profit number is expected at, and you're expected to see loan loss provisions inch upwards slightly. That's the anticipation, but that will be a key number which will be tracked and monitored, and in percentage terms, likely it will come off. That's something that the street will be hoping for, and guidance going forward will also be the key with regard to loan loss provisions or credit costs as one calls it. So that's broadly the take with regard to Bajaj Finance. Ruchit, let me have your take with regard to Bajaj Finance as well on charts. This one has been a rank outperformer. Give us a sense of how you view this one.
The overall trend, no doubt, remains positive for the stock. This year, the returns that that the stock has given, this comes after a consolidation phase of about 5 years. And post that breakout, that high top, high bottom structure is still getting continued if you look at the weekly or the monthly charts. So no signs of trend reversals yet. I think in case because of results, if we get any kind of minor declines, then that should be used as a good buying opportunity. So have some positional view, and you can keep a buy on dip approach on Bajaj Finance. The major support for the stock is seen around 960, 980 positionally. Until those levels are intact, any declines should be bought into.
Dips is the take on Bajaj Finance, but on that note, we'll slip into a very short break. Lots more to talk about on the other side, so you stay tuned and we'll be right back.